Hello, good evening. Thank you for all of you for being here this evening. It's a pleasure that so many of you made it here for IGDC's Annual Lecture 2025. My name is Sabah Joshi. I'm the co-director of the IGDC, which is also known as the Interdisciplinary Global Development Center here at the University of York. Before I introduce our guest speaker for this evening, let me just tell you a little bit about our center. So our center is a research community for researchers across the University of York. We have members from the arts and humanities, the social sciences, and the natural sciences, and we essentially exist to bring together researchers that work in the broad field of global development. We organize events like this. This is our annual lecture that we have every single year. And then we also organize workshops, seminars. We have an active blog and website. So for those of you that are interested in the work that we do, please look us up on the University of York's website and become a member if you're interested, if your work or your interests overlap with the work of our center. So the lecture today, it corresponds to many of the interests of our members at the IGDC. Our members work on the themes of sustainable environment, social justice, and global inequality. And some of these themes are going to be represented in today's lecture on capitalism, conflict, and the climate emergency. And I'll present today's guest speaker, Professor Adam Hanieh from the University of Exeter. So Adam is a professor in the University of Exeter in political economy and global development, and he's also a joint chair in Middle Eastern Studies and at Tsinghua University in Beijing in China. Prior to joining the University of Exeter, Adam was a professor at the University of London at the School of Oriental and African Studies, and he just told me that he is going to join the same university, SOAS, again in February, starting a new position there. So Adam has taught at Exeter for 5 years and at SOAS for 10 years, where he also founded the Center for Palestine Studies. And today he's going to talk to us about two recent books that he's published. One of them he's brought here with him today. Some copies are for sale later on if anybody wants to buy them. Both the volumes that he's going to speak about today are being published by Verso. And so one of them is Crude Capitalism, and the other one is called Resisting Erasure, Capital, Imperialism and Race in Palestine, which he co-authored with Robert Knox and Rafeef Ziadah. So Adam will speak for around an hour, and following this we have the opportunity to ask him questions. There'll be a half an hour's question and answer, so please engage with Adam in that session. And then after that, you're all very welcome to join us for a drinks reception downstairs in this building following the lecture. So with that, I'll hand over to Adam.
Thank you. I want to just begin by thanking Sabah and also the IGDC for inviting me to give this lecture. It's a great privilege, and it's my first time in York, so it's also interesting to be in a different part of the UK. As Sabah mentioned, I want to speak today to some of the themes in this book, and also the question of Palestine, resisting erasure. So I want to essentially cover three major themes. I'm going to begin by speaking a little bit to this question of oil and the place of oil in capitalism, historically at a global level, thinking about why it is that oil has become so central to our lives, so pervasive in our daily existence, and try to tell this in a bit of a different way than it's typically thought about, this question of oil and fossil fuels more generally. Then what I will do is look in a bit more detail at the question of the Middle East. Obviously a major oil exporting region, but I want to try to go against some of the dominant ways of thinking about the Middle East region, which is to center the question of conflict or religious-based explanations, to think more broadly about what does it mean to place the Middle East in the bigger global political economy, in global capitalism, and how that might connect to the questions of violence, conflict, and so forth that we do see in the region. And then finally, to think about what these patterns, these dynamics mean for contemporary geopolitics, the questions of the United States and China, for instance, the questions of what is going on in the Middle East today, the question of Palestine, and of course, the question of the climate emergency. So they're the broad kind of three themes. I'm happy to speak to other things that might arise as we go through. But let me begin with this first question about thinking about oil. So in writing this book, it was the motivation for writing this book was really, in a sense, a dissatisfaction with a lot of the way that oil is typically spoken about. I'm sure those of you who are interested in the questions of the climate, questions of fossil fuel, will know books, for instance, such as Daniel Yergin's The Prize. Or the idea of oil as a curse, the resource curse, or a framework that's often used to talk about major oil exporting areas, countries, the rentier state framework. And essentially, what this book tries to do is to say the problem with this approach to oil is it invests an immense amount of power in this substance, which is just, at the end of the day, a simple black sticky goo. Okay? We need to ask instead, I argue in the book, we need to ask what it is about the kind of society that we live in, capitalism, that invests this substance with such apparent power. In other words, to start with the society, the dynamics, the logics of the society that we live in, to see why it is that oil has become so pervasive in our lives, in our economies, in our politics. Now, this emergence of oil as the leading fossil fuel took place around the middle of the 20th century, around the time of the Second World War. Up until that time, the leading principal fossil fuel had been coal. Okay, so the book tries to say, well, what is it about this moment, this history, and the nature of capitalism that has invested oil with such power? And I talk about things such as the tendency of endless accumulation, the fact that capitalism is built around producing more and more and more stuff in order to sell more and more stuff, in order to make more and more profit. And this kind of feature of capitalism, I'll talk a little bit more about this in a second, really gives oil, it really marries with oil's physical properties, the energy density of oil, the ability to transport it around much easier and simpler than coal, and other aspects. There are other kinds of logics that we can talk about here, including the tendency to speed up the production and consumption of goods, the ever-accelerating nature of our societies. Mechanization is another one. So these, by foregrounding these logics, if you like, of the system that we live, we can get an understanding of why it is that oil has become so intractable and such a prominent feature of our lives. Part of the book also tries to look at how does this emergence of oil as the dominant fossil fuel connect also to the rise of the United States as the dominant global power, again around the same time, the middle of the 20th century, after the Second World War. So, if you like, we can speak here of two transitions. The first transition being coal to oil, and the second transition being from a European colonial-dominated world, Britain and France particularly, towards a more US-centric world in the aftermath of World War II. So the book tries to ask what it is about these two twin transitions that are connected? How do they work together to reinforce one another? Okay, I'm going to come back to this question of transition in a second because it's a misleading word, but I'll talk about that in a second. In telling this story, I really also try to emphasize in the book that we need to move away from thinking about oil simply as the stuff underground, these crude upstream, what's called upstream segment of the oil industry, which is the oil reserves underground, that we extract. Okay, that's important, but actually, what's more important is what oil becomes as it circulates, as it's refined, as it's turned into useful products and moves through our lives. Okay, so I really try to emphasize this kind of downstream segments, it's called in the oil industry parlance, what oil becomes after it's extracted. Okay, so this means, and I'll speak about this in a second in more detail, the question of petrochemicals and plastics. It also means the question of food and agribusiness and the way that our industrial food system is so deeply connected to oil. It also means, and there's quite a lot in this book, and I'll come a little bit to this in a few slides, the question of finance, our global financial architecture, the US dollar as the dominant reserve currency. All of this is really deeply connected with the nature of oil as the leading fossil fuel. And I think foregrounding this helps us see the challenge in actually moving away from oil, okay? Which is the challenge of our lives. The final point is this question, as I flagged a few seconds ago, this question of energy transitions under capitalism. One of the arguments I try to make, and it's not just me who's made this argument, others have also made this, I think, very forcefully, is that the word itself is a bit misleading. Because when we talk, for instance, about the coal to oil transition, what that conjures in our mind is that coal was replaced by oil. Okay? In actual fact, that was not the case. What we saw is oil added on top of coal. I'll show you a graph in a second to illustrate this. And this is, I think, a window or a lens to also understand the nature of the so-called green transition. Okay? That we are not seeing a move away from fossil fuels, but renewable energies, solar and wind and so forth, added on top of an already existing fossil fuel substrate. Okay, it's additive, not a replacement. And this is, I think, very important to understand, and it relates to this question of kind of the dynamics of the system that we live under, because the nature of capitalism is to demand ever-increasing energy throughput. Okay, and how does it do that? By being very capacious in the energy it brings under its control. So I'll come to this energy transitions in a slide or two, but I want to just take a side step to go into a little bit more detail of that point I mentioned earlier around the questions of petrochemicals. To my mind, this is one of the blind spots in our approach to oil, to understanding oil. If we look around us today, in this room, basically everything that surrounds us is a product of oil. My clothes, the clothes we're all wearing, the fabrics in the seats, the carpets, the synthetic rubbers, the plastics, the paints, these are all products of oil. They are not natural products, they are synthetic materials that derive from oil and also later gas, natural gas, okay? Now this turn, this synthetic turn, emerged again around the middle of the 20th century. And there's a really fascinating story about how this happened historically. It connects to again, the United States and World War II. I'm happy to speak about that in the Q&A. But the point is that around this time, around the time of the middle of the 20th century, naturally occurring products like wool, natural rubber, natural fertilizers, glass, all of these kinds of substances were supplanted with this synthetic turn, with a range of synthetic materials that ultimately derive from oil. Okay? Now, this was a very profound shift because what it did was it meant that oil became not simply a liquid fuel that we put in our automobiles. It became the material substrate of basically all of commodity production. Okay? It became the fundamental input in this form of plastics and petrochemicals into most of what we consume, most of what surrounds us today. Okay? Now, this was such a profound shift because it meant two things. One, it meant that oil companies were no longer simply just producing petrols and liquid fuels. They were also involved in the business of the whole of commodity production. Okay? So their position was incredibly strengthened through this shift, this synthetic turn. Oil companies became much more than simply producers of liquid fuels. Okay? The second thing it did is that it made oil invisible. Okay? We think about oil simply as the thing we put in our car. But we don't see that we're actually sitting in a sea of oil that surrounds us everywhere. Okay? And this, I think, is a really important blind spot to highlight because oil companies today, very explicitly, will say petrochemicals are the future of oil. Okay? This is the language, I'm quoting oil company executives here, this is the language they use. They see this demand for plastics and so forth to be the lifeblood, the guarantee of continued oil extraction. Okay? And I'll come back to this question towards the end when we think about the kind of politics of the current moment. This is important also in terms of how we approach this question of plastics. Because, as we all know, you open up any website, The Guardian or whatever it is you want to read, there'll be a news story every day about microplastics, nanoplastics being in this organ or that organ of the body or this animal or whatever. Obviously, and the associated kind of health consequences of that are becoming ever more obvious and ever more researched and exposed. But the problem is that a lot of the way that this question is dealt with, the question of plastics, is that it's dealt with through the need to either deal with the toxic waste or to recycle better, okay? Rather than thinking about it actually as a problem of oil, a problem of fossil fuels. And to do that, I think, takes us in a different kind of politics, a different direction. Okay, and again, I'll come back to this question in a bit later when we're talking about these issues of policies today. So, the question of petrols, plastics, this synthetic turn, I think really needs to be really put forward and emphasized when we're thinking about oil, because it also tells us about how oil companies are organized. Okay, they're not simply the company that extracts the oil from under the ground. They control the refining, they control the petrochemicals production and the transport routes and the marketing to the final consumer and so forth, which is again important to understanding the industry today. So just to come this question of energy transitions, this is I think a very revealing graph that tells us energy supply globally from about 1800. And you can see this moment that I spoke about, the moment of the transition to oil as the leading fossil fuel took place around about the middle of the 20th century, just after the Second World War. It's the orange shade on this graph. From that moment on, that orange shade overtook coal dramatically, but coal itself did not decline, okay, in terms of its quantities. And later on, natural gas, the yellow shade, also was added onto this energy supply. You can see here that those fossil fuels remain the dominant constituent of our energy supply. Obviously, there has been an increase in renewables and so forth later, in more recent times, but added on top, as I said, of that fossil fuel substrate. Now, in fact, last year was the largest year of production of oil, coal, and gas in history. Okay, so we can see, I think, very dramatically this question of transitions. Coal wasn't superseded or replaced by oil, but oil was added on top, and similarly with gas. Interestingly also, again, I won't go into the details of this, but if you look at the kinds of when we see declines in oil, you will notice actually basically it happens very rarely that you get an annual decline in oil, and it's correlated closely with economic recessions. Okay, the 1980-82 recession was actually the largest drop in global oil consumption. Okay, 2008, the COVID crisis, but it's a rare occurrence in that sense. Okay, so let me turn now to the question of the Middle East, and as I'm talking about the Middle East, and in particular the Gulf-producing states of the Middle East, I'll come back to some of these questions and illustrate what it means for the contemporary oil industry. What does oil look like today? So here is a map. It doesn't include the whole of the Middle East. North Africa obviously is also to the side here, but I want to focus in particular on the 6 Gulf monarchies. Okay, in particular, Saudi Arabia, which you can see in the center here as the yellow, in yellow, but surrounding Saudi Arabia, Kuwait, Bahrain, Qatar, the United Arab Emirates, the UAE, and Oman. These 6 monarchies located in the Gulf, Persian Gulf or Arab Gulf, Arabian Gulf, however you want to describe it. These 6 Gulf monarchies are today the largest exporters of oil and gas. Okay, in particular, Qatar is a major gas exporter, but also the other states are increasingly ramping up their gas production, LNG. So these 6 states are major oil exports, the largest oil exporters in the world. They played a critical role in this turn of the middle of the 20th century that I spoke about. Okay, that moment where we see oil emerge as the dominant fossil fuel. What happened, if we're thinking about the Middle East at this time, up until around about the Second World War, the region, those countries you could see on that map, were essentially controlled by European colonial powers, in particular Britain and France, who divided the region between themselves post the collapse of the Ottoman Empire. Now, this was an extremely important feature for the British government in particular, because Britain had identified, led by Churchill actually, not as Prime Minister, but actually as head of the Admiralty of the Navy, the need to shift the fuel source of Navy ships away from coal towards oil. Okay, for various reasons that I mentioned earlier. Oil's being easier, lighter, being able to put more soldiers on the ship rather than having people working with the coal, easier to refuel on the sea, and other aspects. So this wasn't just Britain. The US did the same thing, and other global powers did the same thing in the early 20th century. This strategic shift away from coal to oil in terms of navies. Now, Churchill said at this point, you can read the quote at the bottom here, basically, look, if we're going to make this shift, we need to make sure that the oil, we have a supply of oil that is under our control. Okay, that is under the control of the British government, so we can have this reliable inputs for fuel. Obviously, oil wasn't just important for the Navy, but this is the context he's speaking about here. It's also becomes important in terms of other kinds of militarism and war making in the First and Second World Wars, with aeroplanes and tanks and other kinds of armored vehicles. So it was at this moment that the Britain identified this place, if you like, the source of its oil in the Middle East, in particular in Iran. Okay? At the time, the largest oil refinery was the Abadan oil refinery in Iran, and this was under full British control. Okay? It was under the control of a company called the Anglo-Persian Oil Company, later became called the Anglo-Iranian Oil Company, and today we know that same company as BP. Okay? So BP had its origins in exactly this moment where Britain identified the need to control these oil resources. Iran at the time wasn't a direct colony of the British, but it was essentially under British influence, the monarchy in Iran at the time. Now, what happened in World War II, in the wake of World War II, was obviously the big wave of decolonization globally, which the Middle East was also a major center of. Egypt in particular, there were the Nasserist movements, the Arab nationalist movements that took place in the wake of World War II. And the question of oil really emerged as central to the politics of this moment. Okay, because of the centrality of the region to the world's oil supplies. Essentially, Europe's ability to move from coal to oil was dependent upon oil from the Middle East, which up until this moment was under the control of Western oil firms, like the case of BP in Iran. Okay? So with this anti-colonial upsurge in the wake of World War II, there was a demand to nationalize these oil supplies in the region. Okay? Over the subsequent decades, the 50s and 60s, and through the 70s, most of those upstream oil reserves in the region, again, this is not just a Middle East phenomenon, it's a global phenomenon, were nationalized and taken over by national oil companies in Saudi Arabia, in the UAE, and elsewhere. Now, this shift took place alongside, as I said, the emergence of the United States as the dominant world power. Okay, in the wake of the war, the weakening of European colonialism. And with this shift, the question of oil and the question of the Middle East becomes really central to how American power is configured at a global level. Okay? What the United States does during the 50s, 60s, and 70s is basically establish a very privileged relationship with the major oil exporting countries, those monarchies that I spoke about earlier, in particular Saudi Arabia. Okay? The US guarantees the Saudi monarchy protection. Guarantees the Saudi monarchy it will protect militarily and politically that ruling monarchy and other Gulf monarchies. In return, Saudi Arabia agrees to keep oil circulating and not to use it as a weapon, if you like. Also, Saudi Arabia agrees around about 1974 that oil will be priced in US dollars. Okay? Up until that moment, about 20% of world oil was sold in British sterling. Okay? So this shift to oil being denominated solely in US dollars, which was pushed by the Saudi government at the time, meant that the US dollar became any country in the world needing to purchase this important commodity, the world's most important commodity, needed to hold US dollars. Okay? So it was part of how the US dollar emerged as a central reserve currency that we see today. The other fact, I'll speak about this in more detail in a second, is that the Gulf monarchies agreed that, that the money that they earned from the sale of oil would be recirculated into US financial markets, into US Treasury bonds, into US equities, and very importantly, through the purchase of military hardware from the US. Okay? So we see this virtuous cycle from the perspective of the United States of this financial wealth coming back into the US financial markets, reinforcing the financial dominance of the US at the time. So this alliance between the US and Saudi Arabia was absolutely key to this post-war moment. The other alliance that was very important, particularly after the 1967 war, was the US-Israel alliance, in which the US again identified Israel as a major ally in terms of representing its interests and also being able to push back against Arab nationalist currents like the Nasserist movement in Egypt. 67 war represented the defeat of those movements. So, just to speak a little bit more about this question of finance, because it's extremely important today, and if you've been following the news over the last couple of weeks, you will have seen this story told in real time today in terms of Saudi Arabia and the other Gulf states in visiting the US and elsewhere. But basically, you can see this graph shows OPEC, the Organization of Petroleum Exporting Countries. Saudi Arabia is the major force within this. The export revenues earned from the sale of oil. In the 1970s, as I'm sure everyone is aware, there was a price spike associated with the nationalization of oil. And what this meant was a huge, in the many trillions, earned by OPEC members through the sale of oil. And we call this petrodollars, okay? Not because they're any different from normal dollars, but the money earned from the sale of oil. So about between 65 and 86, 1.7 trillion. I'm going to give you more updated figures for the current moment a little bit later, but just remember that figure, 1.7 trillion, because it's actually now pales in comparison to what we see today. So where did this money go? As I said, a lot of it went into US Treasury bonds, into commercial banks, US and European banks, and very importantly, through purchasing military hardware, weapons from the United States and other European states, but primarily the US. This, again, I don't have time to speak in detail about this, but in the 1980s, this was a big part of how the kind of third world debt crisis unfolded, because a lot of this money that had been placed by the Gulf states in American and European banks was relent to poorer third world countries unable to service their debts. And this was a big part of how the kind of IMF World Bank moment emerged through the 80s. I'm happy to speak more to that in the discussion if you like. So what does it look like today though? Let's turn more to the current moment and what the world oil trade looks like. Because those graphs, those moments from the post-war moment, the 70s and the 80s, the Middle East oil supplies were mostly going to the West, to Western Europe and to the United States, okay? That was the primary destination of these oil exports from the region. Today, there has been a dramatic shift in where Middle East oil flows. So here in this table, it shows you the share of oil imports globally for a few different countries and regions. You can see in the early 2000s, about 50% of the world's oil trade went to the US and Europe, okay? However, since the emergence of China as a major manufacturing center, this balance, this directionality of oil has shifted dramatically. And we see today China representing about 20%, a fifth of world oil imports, okay, going to China, and also significant amounts going to other East Asian states like South Korea, Japan, and elsewhere. So essentially what's happened is there's been an eastward shift in the world oil trade, away from the Gulf's exports to Western Europe, towards the east, okay? There's been an eastward shift in how this oil takes place. Now, very importantly, this doesn't mean that the overall global consumption of oil has remained steady. It's not like a zero-sum game where oil has moved from Western Europe to China and East Asia. The rise of China, the emergence of China as a major center of manufacturing and industrialization has meant an overall global increase in oil consumption by about 30%, okay? So it's equivalent to a new US entering the market, basically, over this period. So this is another example of why this question of transition needs to be thought about at an absolute, not a relative level, okay? We see China's rise associated with a very large increase. Now, where does China get its oil? Predominantly from the Middle East. About 60% comes from the Middle East today. Now, the 20% also from Russia, okay? So there's been this what I call an East-East hydrocarbon axis that now links the Middle East, China, East Asia. Okay, the Middle East and East Asia in this kind of way. Now, associated with this has been the rise of what we call Knox, national oil companies. So these are companies that are predominantly state-owned, state-controlled, state-run, headquartered in some of those countries that I've mentioned, such as Saudi Arabia. A big one here is Saudi Aramco. Okay? Saudi Aramco is the national oil company of Saudi Arabia. It is by far the largest oil company in the world today. Okay? Its profits last year exceeded the combined profits of ExxonMobil, BP, Shell, Total Energies, and Chevron, the big five Western super majors, okay? Their five profits were exceeded by the profits of Aramco, okay? Aramco used to be an American company. Today it is now controlled and owned by the Saudi government. Now, why is this important? Because Saudi Aramco, the growth of Saudi Aramco was very much associated with this eastward shift that I spoke about and this massive increase in demand for oil and gas coming from China and East Asia. Okay? It's propelled the growth of companies like Aramco and other national oil companies in the region, such as the Abu Dhabi National Oil Company, which I'll mention in a second with some further detail. Now, the other thing that's happened with these Knox, these national oil companies, is that they are no longer just extractors of crude oil. They have become active across the whole value chain. Okay, so they have become what we call vertically integrated. They own massive refineries. They are petrochemical producers. They are plastics producers. They own tankers. They own service stations, petrol stations. Down the whole value stream of oil, they are now present. Okay, so Aramco, for instance, is owns the second largest synthetic rubber company in the world. Okay, it bought it a few years ago. So it's one example of how this kind of synthetic turn has now become mirrored, if you like, in these national oil companies, because previously that tended to be much more controlled by Western firms. Okay, so this downstream integration. It also has, I think, very important implications for thinking about the climate emergency, which I want to end on today. So we see this changing dynamic. Here's just an example, again, a bit more detail on Chinese oil imports. We can see about 60% coming from the Middle East, 20% from Russia, and these increasing interdependencies between the Middle East and China as a result. If we think about these connections, we see the Middle East actually emerging as a key node in this bigger global geopolitics of the US and China rivalries, because the Gulf is absolutely essential to China's industrial development, its economy, through these energy supplies. And likewise, China has become much more invested and present in the Middle East, and in particular in the Gulf states. Okay? This first figure, I think, is quite remarkable. The fact that 60% of all China's trade with Europe, the Middle East, and Africa goes through the United Arab Emirates. Okay, it's quite a stark figure, the way that the Gulf is kind of mediates China's relationship with the rest of the world. And there are other examples here that we can see of China overtaking investment in Saudi Arabia from the United States. Closer interdependencies emerging. Now, associated with this, and I want to come back to this question of the petrodollar and the kind of financial surpluses associated with these trends. If you remember earlier, I spoke about that first wave of petrodollar boom, about 1.4 trillion that accumulated. We can think about this today with a period of relatively consistently high oil prices, increasing demand coming in particular from the east. And as a result of this, the Gulf states have become awash with trillions, literally trillions, of new surpluses, new petrodollar or financial surpluses. And we can break this down by a variety of different categories or where this is controlled. One is just foreign reserves, and at this level, the Gulf holds about 800 billion in foreign reserves, so it ranks fourth in the world, behind China, Japan and Switzerland in terms of surpluses, financial surpluses. Sorry. The other very important one is sovereign wealth funds. So these are funds that are controlled, again, by the state, and they basically invest in different assets internally and globally. Okay? And here, the Gulf sovereign wealth funds, such as the Abu Dhabi Investment Corporation, there's a bunch in Saudi, all of the Gulf states have these SWFs. They control about 4.9 trillion in assets. It's about 40% of global sovereign wealth fund wealth. Okay, so they are the big actors in the sovereign wealth fund world. Okay, you will have seen, if you've been following this story about the struggle over who's going to buy Warner Brothers in the last few days, Netflix put a bid in, and then yesterday I think there's a counter bid from Paramount. That money, that Paramount bid, is backed to a large degree by Gulf sovereign wealth funds. Okay, so you see the kinds of investments that these funds are making. The other side to this, of course, is private wealth in the Gulf, and here again it runs into the many trillions of dollars. So this is wealth that's owned by either ruling families in a private capacity or wealthy conglomerates, wealthy individuals in the Gulf. So again, many trillions. And there are other kinds of asset vehicles. One that I find somewhat amusing because it implies that it's state-owned, but it's actually privately owned, is Royal Private Offices, which is wealth that is managed by the state, but on behalf of the ruling families, the ruling monarchs. So it's private wealth in this sense. And again, that's very high. So where does this money go? Those of you who have visited the Gulf region will know a lot of it goes into kind of global and urban development, construction, fanciful buildings, and islands made out of sand, redredged sand. Industrial development, including refining, okay, the questions of petrochemicals and industrial refining. A lot of this wealth has gone into those sectors and connects to the growth in those sectors in the Gulf. There is also, very importantly, been a lot of this wealth has gone into purchasing assets and property and companies and infrastructure in other parts of the Middle East region. Okay, because what happened in the 2000s is a kind of a wave of privatization in places like Egypt, in Jordan, in Tunisia, across the whole of the region. And the prime beneficiaries of that opening up, of that liberalization, of that privatization were Gulf-based investors. Okay, so the story I'm trying to move towards here is understanding how this connection or this place of the Gulf in the global oil industry, the accumulation of these trillions of dollars of wealth was also part of how the region as a whole was reconfigured under these years of liberalization in the 2000s. The deeper kind of connection and role of the Gulf states in business ownership, in class and state formation in the wider region, okay, as a consequence of this wealth. A lot of this money also goes, and this is a very important fact to highlight as well, into international markets, particularly the United States. Okay, the U.S. So the U.S. in fact, about 5% of all foreign investment in U.S. markets comes from the Gulf. Okay, it's one of the top investors globally. Okay, so if you look at China, Japan, the Gulf, China's investments in the US have dropped, but the Gulf has increased, okay, over this period in terms of equities. So even though the Gulf is selling its oil to China, the money is going into US financial markets. So this connection with the United States remains very strong. Okay, and we can see this with the visit of Mohammed bin Salman to the US a couple of weeks ago, where he pledged $1 trillion worth of investments in the United States. We've seen similar pledges coming from Qatar, from the United Arab Emirates. So these connections, these historic connections with the United States haven't lessened despite the fact of this eastward shift in the Gulf's oil exports. Okay, so it's very important to kind of understanding the geopolitics to think about these flows of capital back and forth. And as I said, the question of the military and arms purchases remains absolutely essential. The Gulf is the largest market in the world for military hardware. Okay, most of this coming from the United States, as well as Italy, France, and the UK. Okay, and particularly for US arms industry, purchases by Saudi Arabia are very important. So I think thinking about this money, where it goes, who's invested in it, how does it connect to the bigger political questions, is really important to understand not just the region, but also the global geopolitics today. So just beginning to wrap up with a few comments about how this might connect to questions of the conflict and displacement and so forth. What we saw, I'm sure many of you will remember this moment, 2010-11, the Arab uprisings, where we saw a wave of political mobilization across the region, beginning in Tunisia, but leading to the overthrow of Hosni Mubarak in Egypt, and then protests in other parts of the region. This moment was about both the kind of authoritarian states that existed, like in Egypt and Tunisia, but also the consequences of that wave of liberalization that I spoke about earlier, the neoliberal reforms. There were two waves of uprisings, 2010, 2011, 2012, but also a second wave, 2018, 2019, which were cut short by the COVID pandemic and also state repression. So none of the real kind of demands of these uprisings in terms of bread, freedom, social justice, which were the kind of slogans, were actually really fulfilled, okay, in terms of a real change, social change and economic change in the region. Instead, what we've seen is a very sharp polarization of wealth in the Middle East. By some estimates, the most unequal region in the world, okay, in terms of income and wealth, income share and wealth ownership. And this is, I think, you can see very graphically, if you think about where are the main centers of accumulation in the Middle East. I've spoken, obviously, about the Gulf, and the other one, of course, is Israel. Okay, if we think about where are the poorest countries in the region, we have Gaza, obviously, or territories, Gaza. Okay, and of course Yemen, both of which are literally bordering those two poles of wealth. Okay, so you can see very graphically, starkly, this kind of polarization in the region. Accompanying this, of course, in the wake of these uprisings and the aftermath, are massive levels of human displacement. We see the largest forced displacement in the world, with close to 40 million uprooted across the region. Okay, it's about 1 in 3 displaced people in the world are now come from the Middle East, or are located in the Middle East. So huge levels of human displacement. These kinds of statistics, with the wealth polarization and so forth, come before the recent, the 2 years of war we've seen in Gaza, okay? Which on top of these figures certainly indicate further displacement, further ethnic cleansing in the case of Gaza, as well as large numbers of people killed, infrastructure destroyed. So if we're looking at the region as a whole, the story is basically one of two tracks. Okay? On one hand, unprecedented levels of displacement, crisis, war, and death. And on the other, wealth booms, extraordinary levels of wealth concentrating in narrow populations and territories and countries in the area. Okay, so this polarization is, I think, really key to understanding it, and also to see its relationship with this kind of fossil fuel-centered world. Okay, which really, I think, explains how these patterns of development have emerged. Now, I want to just say, Palestine is obviously at the forefront here in terms of what people think about, and also the coverage of the last couple of years. But we should not also forget other countries in the region, in particular Sudan, which has had around 11 million people displaced since 2018, okay? A large number of refugees, internally displaced and refugees, tens of thousands, some say 150,000 estimates of people killed in Sudan. Yemen, Iraq, Syria, Lebanon, we can basically examine the countries in this way. What is significant about these countries, however, is that if we look at the internal politics of them, we look at the kind of forces that are involved in the civil wars, these conflicts, we see these same actors that I've spoken about earlier, the Gulf states and Israel involved in these kinds of displacement and wars. So in the case of Sudan, for example, we see Saudi Arabia and the UAE, United Arab Emirates, basically taking two different sides in the country's current civil war. Okay. Similarly, in Libya, we see the Gulf's intervention in Yemen, direct military intervention by the Gulf, and so forth. So, thinking about these conflicts, not simply in terms of what goes on inside their borders, but this bigger bigger regional picture is essential, I want to argue. Now, coming to the issue of the climate emergency, because this adds also a new dimension to this question of oil, because not only is the region the center of oil exports globally, it's also increasingly becoming an epicenter of the impact of the climate emergency. This picture here on the right is of an area, Isfahan in Iran. And I don't know how many of you have been following the story, but Iran has basically announced that it has to move its capital city, okay? A city of 10 million people, because of, in part, the question of water, lack of water, basically, related to climate change. So this is, of course, it's a terrifying prospect once you actually look at the details, because to move 10 million people is not a straightforward prospect. And, I think it's quite clear that this kind of impact of climate change will certainly presage a further wave of displacement, climate displacement, related displacement, okay? Other kinds of facts that I think the question of drought is very clear, but also, regular occurrences of 50-degree temperatures, particularly, again, in the Gulf states. So we have this kind of perverse pattern developing where these states are major oil exporters, suffering directly from the impact of climate change. In places like Saudi Arabia or the UAE, the solution is obviously more air conditioning, and that's why these states are actually among the top in terms of air conditioning density in the world. But this, of course, demands more electricity, more energy. Most of the energy for this in the Gulf is produced by burning oil and gas. Okay, so we kind of see this kind of perverse self-reinforcing cycle. And the questions of food is very important here too. So I said I would speak for an hour, so I'm going to leave on this slide and just kind of talk about this kind of where we might see this going. I haven't spoken a lot about the question of Palestine, and I'm happy to expand this in the discussion, but I do want to say that I began this presentation by saying how important the Middle East was to the emergence of the United States as the dominant global power in the wake of the Second World War through the 1960s and so forth. And it was built, US interests, US strategy in the region was built upon this alliance between two main pillars. One hand, Saudi Arabia and the Gulf, and on the other, Israel. Okay? In recent years, what the United States has attempted to do is to bring together, to knit together these two pillars of its influence in the region through normalizing the political and economic and diplomatic relations between the Gulf and Israel. Okay, this is it's not a new policy. It's been in place since at least the 1990s, but it took a major step forward in 2020 under the first Trump administration with the Abraham Accords, which saw UAE and Bahrain normalize their relations with Israel, sign a free trade agreement in the case of the UAE. I think very firmly, and this is not speculation, you can certainly see this indicated in the ways that US foreign policy spokespeople are talking about this. The aim of this normalization is ultimately a way of reasserting American primacy in the Middle East in the face of these kinds of connections, the East-East connections, the ties with China that I've spoken about earlier. Because in the event of any deeper conflict with China, the ability of the United States to either put sanctions on Chinese firms or on the oil industry, to hit back against energy imports, which are essential to the Chinese economy, this would be massively strengthened and enabled by this kind of normalization process. Okay, so I think thinking about Gaza, Palestine, not simply through the lens of human rights abuses, violations of international law, but actually understanding the region and the place of the region in the fossil-centered world that we have, makes sense of these kinds of geopolitical alignments and makes very clear sense of what the current proposals around the future of Gaza is likely to be. Okay? It also makes sense for why Trump, the first place he visited after his recent election was Saudi Arabia, then Qatar, and then the UAE. Globally, the first countries he went to were the Gulf, and all of these high-profile visits back and forth we've seen in recent weeks. It's an attempt to reassert American primacy. The consequences of this, I've talked about the massive polarization. I don't want to leave this on a negative note. I do want to say that I think, thinking about these things, that the legacies of the earlier uprisings have not been forgotten, even though they haven't been addressed. Okay? Generations of people went through a moment of struggle, learning a new political vocabulary, new repertoires of struggle. We saw this reappear in 2018, 2019 at a regional level, and I firmly believe that we will see another resurgence of struggle from the region. But thinking about these things at the level of the regional scale, thinking about the intersections with climate and oil is absolutely essential. We can't just take this as a question of religious hatred or conflict or so forth. That doesn't explain why the Middle East actually is in the situation that we see today. Thank you.